Exactly right, Carl. We're down about 0.2%, sort of a flattish open, I'd say, about even on the advanced decline line. Let's take a look at the major movers. Once again, semiconductors lead, but that's been the lead story all year, frankly. The SMH, that's up about 50% this year. There's your big story. Everything is using semiconductors in one way or another. Industrials flattish, had a good run, is flattened out a little bit. Consumer staple hasn't been doing much. Banks have had a nice run on the yield curve steepening and on some of those announcements on Friday on bank buybacks, flattish today, as you can see. As for the mega cap stocks, they're starting to split. They don't go up the same way or down the same way the way they used to. Apple's was at a 4-month high just recently. Microsoft's been holding up well. Amazon, nothing. Amazon's been flat for months now. Alphabet has been in a downtrend for a little while, up a bit today here. Facebook was at a 2-month low a day or so ago. So these stocks are not acting in concert anymore. Some of it obviously due to some regulatory pressures. Of course, the things moving the market, smooth vaccine rollout is the hope for that. Main animator of the market, hopes for additional stimulus. Remember, as my friends, the trading community, keep reminding me, the big stimulus program is not the fiscal stimulus, the $900 billion we're hoping for. It's really the Fed stimulus. I keep getting comments from the trading community, Bob, you're not emphasizing the Federal Reserve's role enough here. And it's true. That program they've got, what have they bought, $3 trillion so far this year, somewhere around there? Their balance sheet's gone from $4 to $7 trillion. 2021, they're going to buy $120 billion a year of additional fiscal stimulus that's going to be happening for them, Treasury bonds, mortgage-backed securities. So keep an eye on that. That's the main thing moving the markets here. Leslie was talking about Alibaba. I think the big thing about Alibaba is, remember, it was 315 just when he was making those comments critical of the Chinese government in October. And you see it's down about 30% since then. But JD.com, Baidu, the rest of the China market's been holding up well. In fact, China's been one of the best performing markets in the world. The thing you want to own here is MCHI. This is the broadest way to own China. It owns Hong Kong stocks, it owns mainland China stocks, and it owns stocks listed in the U.S. like Alibaba. That's up 25% this year. It's one of the best performing indexes in the world, and that's because of the rapid turnaround in the Chinese economy that they've seen over there. Finally, the Santa Claus rally. This is one of Wall Street's favorite old saws. It is the tendency of the market to rise in the last 5 days of the year, the first 2 days of the new year. The tendency historically is to go up 1.3% in this period. Traders love this because it's easy to play against. The problem is it doesn't work that well much anymore, Leslie, primarily because I think a lot of people have just figured out ways to play it very easily. And if you think about it, Leslie, efficient markets, these kinds of things can be arbitraged out eventually. And you see, it hasn't worked very well for the last 5 years.
Maybe it's the Grinch sell-off, perhaps. We should start calling it that. Bob, thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.